Hey there, contentious investor once again. This is the second part of my Dragon Portfolio video, so if you haven't seen that already, I highly recommend doing so, as information in that video will only be glossed over here. Sorry I was speaking so fast on that one, so it's probably best to play it with half-time playback speed. It should be shown now in the iCard above. Sorry about the delay between part 1 and 2, but it's kind of hard to do a video on how to enhance the returns of the Dragon Portfolio with crypto savings accounts without knowing what crypto savings accounts are. Since I don't want to get sued, this is for educational entertainment value only and should not be taken as financial advice since I am not a financial advisor. So what does cryptocurrency let us do to the Dragon Portfolio? For active long volatility, cryptocurrency is no help. Sorry. For the commodity trend following and US equity portions of the portfolio, you could theoretically use something like synthetics, but that is almost certainly worse than just doing it the normal way through your brokerage account, using equities, options, and futures. For the physical gold and fixed income parts of the portfolio, however, that's where the cryptocurrency can come in handy. Let's start with fixed income. It's supposed to serve three purposes in the portfolio. The first is to be an asset to rebalance into so that the portfolio can never take too much of a hit. In a way, it's very similar to just plain old profit taking. Fixed income is also supposed to be able to be a low risk instrument. For example, buying junk debt to increase returns is just a bad idea because during bad times many of the bonds will default. Fixed income's last purpose is to take advantage of lowering interest rates during bad times by central banks, causing the value of the principal to rise. Crypto savings accounts are able to pass all three criteria. If you need a refresher on crypto savings accounts, there'll be a link to my video on them in the iCard above. While interest rates were lowering in the real world, crypto rates went nowhere. That is, they didn't go down, they didn't go up, they just went sideways. Since the loans are over-collateralized, the risk of default doesn't change no matter what the economic conditions are. The third criteria would normally be an issue, which was principals going up as rates go down, since crypto interest rates won't go up when the real ones go down. However, since rates are already at zero, bonds can barely go up, so the capital appreciation there would be negligible compared to the far superior returns of crypto savings accounts. If they are correct to use, it begs the question, which crypto savings account should be utilized for the Dragon Portfolio? Like always, it depends. The paper was based exclusively on the United States, so we don't have to deal with the annoyance of non-US dollar stablecoins. The Dragon Portfolio traditionally rebalances yearly, so fixed deposits aren't an issue in this case. Due to this, the only real options among the many I suggested in the crypto savings account video are uHodler and Crypto.com. For Crypto.com, the yield you get in the savings account is based on the amount of MCO you have staked. For less than 500 MCO, you get 10% APR. 500, you get 12%. At 5,000 or more, you get 12% plus 2% in MCO. However, you can just sell the MCO when you get it, so it's as good as getting it in stablecoin, so I'll call it 14% for simplicity's sake. Since this has come up 2 videos in a row, I clearly need to make a video on Crypto.com and MCO. When I do, it will be linked in the iCard above. Maybe subscribe and ring the bell so YouTube will notify you when I release it. Anyways, if it is worth it or not for you to get the MCO depends on a couple of things. First is if you have access to uHodler due to living in Europe. The second is asking how much of the portfolio is going to be allocated to crypto savings accounts by adding up fixed income, physical gold, and the optional Bitcoin allocation. The last question is how much money is going to be allocated to that part of the portfolio. If you had $1,000 you're putting into the portfolio, you probably don't buy any MCO. If you're putting in $5 million, you probably go for $5,000. I wish I had some kind of flowchart or formula I could give to you to optimize the amount of MCO to buy, but it is impossible to backtext this. Crypto savings accounts only sprung up in the last 5 years, so obviously there is way too little historical data for a 100-year strategy. Also can't know how the portfolio percentages change when dramatically increasing the yield of 2 categories, nor what allocation to give Bitcoin without blindly guessing. However, blindly guessing is super fun, so I'm going to give it a shot anyways. Despite the fact that I am super bullish on Bitcoin, adding more than 5% to a portfolio that is supposed to be for the next 100 years with such an unproven asset is a bad idea, so I'll only give it 5%. I'm going to increase the allocation to fixed income from 18 to 25%, considering that crypto savings accounts mean that low interest rates are never a problem. Increasing the allocation to something that yields less than the original return may seem like a bad idea. After all, the original portfolio had a 14.4% annualized return, whereas the very best we can get is 14% with fixed income. However, since that return in the original portfolio was not inflation adjusted for the Dragon Portfolio, a ton of the returns came from when there were inflationary periods of time, in which crypto rates would likely be much, much higher than the 14%. If we can get 14% when there's very low inflation and real-world interest rates, just think about how high they will be when interest rates or inflation balloon. Gold, I will barely move up from 19% to 20%. While earning interest on gold makes it a far superior asset than before, Bitcoin serves a very similar purpose in the portfolio to gold, and raising hard assets above 25% of the portfolio could start to seriously hurt returns due to lack of diversification. I'm going to lower the exposure to US equities from 24% down to 20%. While they do an excellent job during periods of growth, the fact that fixed income will no longer relatively suffer during those periods, as well as our hard assets not dropping as much, makes them far less necessary. It also doesn't help that I subconsciously despise US stocks at the moment due to the massive bubble they're in right now, but we are long-term investing here, so that shouldn't be a factor. Long volatility and commodity trend following will each be lowered to 12.5% of the portfolio. While this might be too little exposure to them, the tail risk that we utilized for them was already dramatically reduced, since we lowered our exposure to US equities and increased the exposure and yields of hard assets and cash. And we don't need as much portfolio insurance, which these assets act as. It's certainly possible I made these too low percentage of the portfolio, which I would fix by reallocating 2% from fixed income, 1% from gold, and 1% from Bitcoin to these assets. However, even with this theoretical portfolio, it has basically no one that it's correct for, because we don't live in a world where everyone is the same. People have various different amounts to invest, affecting how much MCO they should buy. People can stomach dramatically different amounts of volatility. Some people live in Europe and therefore can use U-hodlers, some cannot. Whether or not you want to hold Bitcoin is another big one. Your tax situation is a massive factor. Capital gains rate, what taxes look like on crypto interest, and what parts of the portfolio are tax protected is another big one. And since I am not a financial advisor, I am in no way qualified to tell you how to set up this trade considering your own unique personal circumstances. Given how this new portfolio can't be backtested, it basically guarantees that we don't know what the allocation should be. It will beat the original portfolio for sure because we just made gold and fixed income guaranteed to be better, but guessing is the best we can do for allocations. The major perk that constructing the new portfolio like this dramatically lowers the volatility of the portfolio since we lowered the exposure to equities and increased the exposure to fixed income, and gold can't draw down nearly as much. Therefore, the maximum drawdown is also far less. The question is, how much interest can we expect from the savings account for our non-fixed income assets, gold and Bitcoin? Once again, it depends on your MCO allocation and if you can use U-hodler. As the only major gold stablecoin, we're going to be using PAXG. If you can use U-hodler, it beats Crypto.com for gold, even with 5,000 MCO, because U-hodler offers 8.2% APR on the PAXG. This interest is also paid in kind, meaning that when prices are rising, it gives you more exposure to the move before you rebalance at the end of the year. On Crypto.com, on a 3-month fixed-term deposit, you can get 4% on PAXG, 6% with 500 MCO, and 8% with 5,000. As for Bitcoin, 500 MCO gets you 6.5% APR, and at 5,000, 8.5%. Remember that the interest is once again in kind, except for in the 5,000 MCO circumstance in which you have to do some of the converting yourself. If you don't have at least 500 MCO, BlockFi currently offers the highest rates on Bitcoin at 6% APR. As always, you should always shop around, since crypto rates are constantly changing and new platforms constantly spring up due to how new and competitive this sector is. When it comes time to rebalance the Dragon portfolio once a year, using cryptocurrency is a blessing, in the US at least. While the interest you will receive will be taxed at ordinary gains no matter what, cryptocurrency is counted as property in the States, meaning that the wash rule doesn't apply, which means that if any of your assets ever cost less than what you bought them for at the end of the year, you can sell them and immediately rebuy them and score yourself a tax deduction while keeping your holdings the same. You can't do the same thing for stocks and bonds since they're securities and not property. Also, this is not tax or financial advice because I can't legally give any of that, by the way. For a lot of people, the long volatility and commodity trend following parts of the portfolio are extremely difficult to put on. While it will slightly hurt your returns due to having worse overall returns, using something more like the permanent portfolio or the all-weather portfolio may make it substantially easier to put on this trade. With crypto savings accounts, it may actually be a better overall return, since the gold and fixed income allocation performs so much dramatically better. To put on one of these portfolios, put around half in fixed income, 15 to 25% gold, and the rest in stocks. It's pretty flexible and easy to put on, and it's quite flexible in the allocation that you make, so that balancing in and outside of an IRA or other tax-protected vehicle isn't as much of a pain. I'm going to put links in the description, some of which will give you free money as a sign-up bonus. If you think I'm only recommending these platforms for the referral links, just get a random person off the internet so you still get the free stuff. If you have any questions or feedback, let me know in the comment section below. If you got any value from this video, you can do the usual stuff for the algorithm, blah, 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 blah. Like, subscribe, etc., etc. Another video should show up at the end card, so feel free to watch that if you want some more contentious ideas. But this has been The Contentious Investor. Until next time.